listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Before we get into our intriguing content, please join me in welcoming our featured guest. Melinda Johnson, Freedom First Properties, is with us. Welcome.
Good morning, Ron.
Glad to have you with us. And let me remind you, if you ever have any home or finance related questions, I am the consumer advocate looking out for you. And you can reach out to me directly at 800-306-1990, 800-306-1990. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. Yes, of course, we are celebrating today. You might have noticed I got a new hat for the day just for this special occasion. It's St. Paddy's Day. I was listening to one of the news programs early this morning, one of the business channels. It's kind of a goofy thing that I do. And for those of you that are more religious, I understand that the Cardinal in New York said today's a freebie day from Lent. I don't know what all that means, but that was just his commentary. We are celebrating, though, National Corned Beef and Cabbage Day. There is no truth that it also comes with a little bit of Beano. Just a side note right there for those of you that have that kind of a digestive issue. Dow Jones Industrial Average down ever so slightly. You can't even call it down. It's not even a full point. 20,932 as we speak right now. Oil down 2 cents a barrel. And the U.S. 10-year Treasury, it's falling a little bit. It finally broke below the 2.50 point in the yield. So we're seeing a little bit of good news for interest rates right there. Might have a little bit to do with what's going on in Washington right now. There is a little bit of fun in Washington. I always have fun with Washington. Also, our snowflakes up in Berkeley, they're having a little bit of fun up there also. It's amazing what we're seeing right now. We've got the loon on the left, Nancy Pelosi. I mean, it's unbelievable watching and listening to Nancy Pelosi talking about the president's new budget. Now, this is the budget, and I couldn't make this stuff up, but she's upset about the National Endowment for the Arts, and the president talking about cutting a significant portion of their budget. Now, I have no objection to the arts. In fact, I am on an advisory committee for the Anaheim Performing Arts Center, so I do have a affinity for the arts. But when we're spending millions of dollars to study the effects of shrimp on treadmills, I'm not sure what the art is in that part, but that's the budget, that's the issues that Nancy Pelosi has with some of these things. I just can't figure those out. Where's there a problem with that? There's $5 million from the National Endowment. Here's a new art. This is an art that I can get behind. Actually, I did get behind it significantly, but I was also about 30 years younger. But the art, there was a $5 million study to understand the effects of fraternity parties on college students. $5 million. Now, I could, for 10% of that, I could probably give you the answers to those questions. I was part of a sample in that study, so I could probably tell you that for 10% of that money. But, Nancy Pelosi, we can't cut any money there. We had the shrimp on the treadmills. We've already talked about that one. I think there was another really good one that I saw in here. I think we were looking at, we have that whole report, the flake report. It's, if you want to find, here's $300,000 to figure out, do boys play with Barbie dolls or girls play with Barbie dolls longer? Needed $300,000 for that one. We spent $450,000 to research whether dinosaurs could sing. and $1.5 million to analyze what happens to fish if they find themselves on a treadmill. Gotta love. I can't make this stuff up. It's all in the report. These are where your tax dollars are going. Now, the concept here, the best part of this whole survey is if you listen to our new budget director, his commentary was, instead of us just thinking about all these areas where we need to spend money, are we thinking about the people that we're asking for their money? And what are we doing with their money when we ask them for their money? Think about that concept. I loved that idea when they made that comment yesterday, is think about, and the example that the budget director used was the single mom, 2 kids in Detroit who has to pay a tax bill. And it is to decide whether shrimp do well on a treadmill. Heck, look at me. I don't even do well on a treadmill. Why does walking with coffee cause it to spill? We spent $172,000 on that. Where does it hurt the most to be stung by a bee? We spent $1 million on that. Do Republicans and Democrats look different? $50,000 for that one. You gotta love this one. Now, you can't make this up. Do drunk birds slur when they sing? And we spent $5 million for that. Why does the face of Jesus appear on toast? $3.5 million for that one. Are Republicans or Democrats more disgusted by eating worms? Are you getting the clue here? And we talk about that we cannot cut anything out of our budget. Does this make sense to anybody? Can anybody come up with a logical reason about on these things? It's just the snowflakes. Speaking of snowflakes, now here's the greatest one of all. You got to love this. The city of Berkeley now has come out and they said anybody that does business with building the wall cannot do business with the city of Berkeley. This is coming from the city that has an 87% higher crime rate than the national average. 87%. And they're worried about, this is what the City Council of Berkeley has to worry about, is which contractors are working on the wall versus working for the city of Berkeley. Now, I must admit one issue that I did understand here. With the way they've got the crime in Berkeley and with the snowflakes that they've got in Berkeley and the rioting that they have in Berkeley, the wall will probably be a one-time build. Berkeley is like an annuity. They keep having the same problems over and over. They can't figure out how to correct them. And they go on and on. I just got to get off of this. It's Friday. We're going to have some corned beef and cabbage. We might have a drink or two. But we're going to talk about buying a home with a reverse mortgage. Is it possible? We're going to get some input on that. Do a little bit of a different broadcast today. Melinda Johnson's in with us. She's going to moderate a lot of the questions that have come in and are coming in. So if you have questions, go to facebook.com/Ron Siegel Radio, or you can just go to my personal page, a public page, look it up. We've got the live feed of a Facebook right there, so you can go and put your questions in there. We're going to monitor those. We're going to also go with some of the others and see what we've got there. Hi, Doreen. It's good to see you with us this morning. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, reverse mortgages. Can you buy a home with a reverse mortgage? Don't let your luck run out. What is a reverse mortgage? And estate planning, wills and trusts. We've got a lot to cover today, so we're going to get at it a little bit quick. You can reach us anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
What if your family business could help clothe a less fortunate family? Or your restaurant could feed truly hungry people? What if you could help to comfort the lonely? Plant sustainable resources where nothing has ever grown before. Or make a child's lifelong wish come true. What if all you had to do was simply do nothing more than what your business already does every day? Would you do it? Introducing Processing for a Cause, a unique program that turns a percentage of your business's credit card volume into ongoing donation dollars from nonprofit organizations and foundations. Simply switch your credit card processing provider to Processing for a Cause and begin supporting a worthy cause today. The process is simple, and the cause will change lives forever. Processing for a Cause.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel radio partners. As one of the heroes, real estate agents will rebate part of their commission. Lending partners will give a credit at closing. The title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Being that it is St. Paddy's Day, I took my hat off. Obviously, you can tell that. But the subject of the real-time real estate segment today being brought to you by Nest. Text NEST to 79564. Find your dream home before someone else does. Is don't let your luck run out. Interest rates won't be this low for long if you are one of the many Americans debating purchasing a home but are not sure if you will buy now or wait until next year. Here's a little simple example of the impact of interest rates and prices as anticipated. So today, Freddie Mac interest rates 4.20, the projected Freddie Mac projection for 2018 4.80. If we look at CoreLogic's median home price, $250,000, they're projecting a 4.8% appreciation or increase. That $250 becomes $262. Based on both of those, the mortgage payment goes from $1,222 to $1,374. Cost of waiting to buy is defined as additional funds it would take to buy a home if prices and interest rates were to increase over a period of time. The increase in payments, monthly $152 a month, annually $1,825, and that would equates to $54,750 over 30 years. $54,000 it'll cost you over 30 years. So the cost of waiting, not really in your best interest. If you're thinking about buying, give me a call today. I'll put you in touch with a great real estate agent. Melinda Johnson's right here. She can help you. Not right now. Wait till after the show's over. Multitasking is very difficult. It's hard to talk on the phone and on radio at the same time. Some people try it, but it does become a little bit confusing. So today what we're talking about is a reverse mortgage for purchase. I'm going to give you a bit of an overview, and then as the questions come in, and some of them that we've already got, we're going to go through Q&A for you, so go to the Facebook pages. You can put your questions right there. There is some confusion between the terms HECM, H-E-C-M, and reverse mortgage. HECM is nothing more than the FHA version, and it's called a home equity conversion mortgage. It is a loan that enables homeowners 62 and over to convert part of their equity, the equity in their home, into or part of their cash into equity in a home to buy a home. Give up title ownership. No, it's all your title and no new monthly payments. Who is it that's doing this? Well, it's ages 62 or over. We know that we're living longer. Retirement, your home equity is probably a major portion of your retirement or of your financial portfolio in most instances. The reverse mortgage can also be used. Some of the myths, I'll get to some of the myths down the road, but we know that 10,000 people a year are becoming age 10,000 people every day are turning 65. Think about that. It's projected to continue for the next 15 years, according to Pew Research. Millennials and baby boomers, they're the dominant groups or demographics in our society for the next 10 years. The other part of it is when we started planning, and I can share this, when I was at Merrill Lynch and we were talking about retirement planning, back then, people retiring at 62 and are retiring at 62, the life expectancy was 75. Life expectancy now is 85, and the fastest growing demographic, believe it or not, well, it's kind of a skewed number, is those people that are the centennials, those turning over 100 years old. It's kind of skewed because, to go up 20% when you start with a small number is a little bit of a skewing in there. So when we're looking at these issues, the longevity issues, is we're living longer, but we're having more expenses in healthcare, more expenses for housing, retirement, entertainment, travel, just the way of the world right now, that we're seeing that there are more costs involved in being retired. When we started Social Security, the idea was you got Social Security at 62, you died at 63, it was no big problem. Jason, you're right, you're going to be 120, you're in good shape. Me, I'm going to probably, I don't know if I'll make 62. But here's the idea here is households are looking at every possible source of income that they have. If you're sitting on $50,000, $100,000, $300,000 in home equity, that is a source of revenue for the senior population. There are some folks, and this is an emotional part, and I've never even talked about this part of it before. The emotions for a senior of their retirement home, their last home, is not nearly as emotional as the home that they have from their probably 25 to 55 age group. That's when we're raising our kids. That's when we're going through the majority of our life. That's when our sentimental values are coming. When we start getting into the 65, 70 years old, the sentimental, and you've sold that bigger house. You've gone from the 4-bedroom house maybe to a 2-bedroom house or a 3-bedroom condo or a single story. The concept there is it's not as emotional because that's not where you're raising your kids. That's not where your life has happened. So you've kind of divorced yourself of the property. That's why we look at that as, we call it right sizing. We also know that the idea is aging in place. That doesn't necessarily mean the same place. It means that our seniors want to have their own home. They don't want to be dependent on anybody. So now we're looking at the idea of a reverse mortgage for purchase. One of the big confusions is, yes, you can do a reverse mortgage for the purchase of a property. There are some specialized guidelines here. It's not the same as a traditional reverse mortgage, but one of the big benefits of it is preserving cash. There are a lot of folks that have made the decision, I want to have my house free and clear. I want to pay it off. They've gone to a 15-year mortgage. They've gone to a 20-year mortgage. They might have stayed in the home for 30 years and not used it as an ATM, and they've made accelerated payments. And now they're looking and saying, okay, I'm 65 years old. I've got $500,000 in equity here. I can't do anything with it, but I want to have a nice house. And I don't need this big 4-bedroom or 5-bedroom house, 2 stories that I can't get up and down the stairs anyway. So they want to buy something different. Preserve the cash or make that cash work for you in a little bit more efficient manner. So the idea is you can sell that house for the $500,000, and maybe you can go buy another house for $500,000, use $250,000 as a down payment, and put the other $250,000 in a safe, secure environment that maybe it makes you 5%. So $250,000, 5%, that's another $12,000 a year that you can use for living expenses or desires or whatever you want to do. Maybe you're looking to relocate closer to family. Maybe, again, you want to have a single-level home instead of a multi-level. Maybe you don't want to have the big maintenance, the big yard. Those are all areas that are there. The reverse mortgage has built in. Now, this isn't again, going back to some of the myths that we've talked about. The reverse mortgage has built in a lot of consumer protections. In the 80s, it did not have a lot of consumer protections, and the seniors were getting taken advantage of. But the reverse mortgage is a non-recourse loan. What that means is the only thing that the investor can come back to if you don't pay this off is the property. They cannot go to your heirs if you pass before departing the property. They can't go after your heirs for the difference in the value if the property becomes worth less than what you owe on it. It's a technical part, but it's a non-recourse loan. The reverse mortgages have no time limit on how long the borrowers can stay in their home. You can stay in the property for 30, 40, 50 years, as long as you got it when you're 62 and you die at 112. Well, you can stay there for 50 years making no payments at all. You do have to pay the property taxes and the insurance. The borrowers are required to go to an independent third-party counseling. It's about an hour on the phone. That is a HUD-approved, Housing and Urban Development approved counselor. So there's some safeguards built in there. Who is eligible? We have to be 62 years of age or older. You have to have enough money to buy a home and have the down payment money. Can't use borrowed funds for the down payment. And it's pretty difficult to do concurrent closings. There's little challenges there. Must be your primary residence, must meet FHA property standards. You have to move in within 60 days, and again, you have to have that mandatory counseling. So what kind of properties can you buy? Single-family homes, 2 to 4 units, townhomes, FHA HUD-approved condominiums, and here's another tricky one. New construction is allowed. But again, we'll talk about some of the tricks to that one. What is not allowed? We can't do co-ops, and you cannot do bed and breakfast. Doesn't work that way. No boarding houses. How much do you qualify for? So here's how you deal with the qualifications. There's only 3 real qualifications. Age, the maximum amount of the property value or the $625,000 limit, and the interest rate. So the older you are, the more you can get from the higher percentage of property you can buy. Interest rates, there are fixed rates and there are adjustable rates. I am a big fan. In most instances, I'm not. But in this particular product, I am a big fan of the adjustable rate version. There are a lot of benefits that you get with the adjustable rate that you do not get with a fixed rate loan. And really, when you think about it, you're not going to pay it anyway. Your heirs are going to pay it, so don't worry about it. So and I'll explain the exact reasons why in just a second. So just to give you a perfect example here, you have to find a home for $400,000. You're age 62. You're going to roughly be needing about $195,000 to buy that house and never have a payment again for the rest of your life. Roughly 50% proceeds, 50% cash. Age 85. So you can get a loan for $265,000, roughly 65% more proceeds, 35% cash. And in the middle, there's different numbers. So again, $400,000, you're going to be able to do that. Get a loan for $227,000, the balance you need cash. Just a few concepts right there. Property must be in good condition. Cannot have any health or safety or structural issues. Those all have to be done by the seller before you close escrow on a purchased property. And it must be included in the purchase agreement as an addendum that the seller's doing it. The offer, I'm going to suggest a 45-day escrow. The offer is going to be written up as an FHA reverse as the type of financing. It's not just FHA financing, FHA reverse. You've got to have a fully executed contract. They say an original contract, but that you just put a stamp on it that says original. The agent, you must talk to your agent. They've got to put an FHA, a mandatory clause with the contract. It's pretty basic, but it's just part of the process. The seller cannot pay closing costs. The seller must pay for all the repairs prior to closing, and all the repairs need to be on the addendum. And here's the big tricky part. If it is new construction, it must have a certificate of occupancy prior to starting the process. So sometimes the builders don't like it because you have to have a certificate of occupancy before you start the process. So it's just a few of the guidelines. Now I'm gonna give you this also because I want to get into the questions. Why would you not do this? Okay, there's the myths. I always say the big five. There's 5 myths of any reverse mortgage. These go for forward or for the reverse mortgage for purchase or the reverse mortgage for equity. The bank does not own your home. You own your home. You do not have to have a free and clear property to start a reverse mortgage. You are not going to be forced out of your mortgage or your home unless you don't pay your property taxes and your insurance, same as any other. My heirs won't inherit anything. Your heirs inherit the property no matter what. And if I live long enough, I could owe more than the home is worth. Well, we talked about that. It's a non-recourse loan. Say you have a property and you owe $700,000 and it's only worth $500,000. Your heirs get to buy it for $475,000 even though you owe more. They don't have to pay the rest of it. So those are the myths there. That's part of the reasons why not to do it. If it's your goal and you can't get past the idea of leaving your kids or your heirs a free and clear home, easy for me to say, then this is not something for you because you're not going to be leaving your kids necessarily. You could, but it's not leaving them something that's free and clear. I recommend it being right around your final home, not someplace where you're going to want to be moving. It's not something for buying and flipping. That's not the idea. It's not for short. One of the only people I've ever told not to do a reverse mortgage is somebody that told me they planned on only being there for a year. It didn't make sense for them. And if you can't come to grips with this whole concept of a reverse mortgage, if it's going to keep you up at night, don't do it. That's not what we're looking for here. We're looking for peace of mind. That's our goal with a reverse mortgage. We're going to talk more about this. Your questions, they're coming up next. You're listening to Ron Siegel Radio, discussing your real estate and current events. When we come back, what is the reverse mortgage? We talked about that a little bit. Estate planning and how that is affected with your reverse mortgage. You can reach us anytime. Off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us. Facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details. 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender. Licensed under NMLS number 217037.
Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel Lending Team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel lending team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel lending team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender.
Do you own real estate or have assets over $150,000? Do you know one of your heirs will be the probate courts and the IRS? If you don't have a living trust, you will go through probate. Call Heritage Financial Services toll free at 1-855-434-7400 for a free review. Check us out on Facebook, Heritage Financial Service in Lake Forest, California. That's 1-855-434-7400. Again, 1-855-434-7400.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. In the Mortgage Minute today, being brought to you by AskAboutReverseMortgages.com. What is a reverse mortgage? It's nothing more than a lien on your property, the same as a forward mortgage. It's a lien on your property. Here's the fun issue of it. There was a product about 10 years ago that people didn't like, but it's really it was a bad application of the product. It wasn't a bad product, which in most instances. The reverse mortgage is like a pick-a-pay loan. You can actually pick your payment. If you want to make a payment, fine. If you don't want to make a payment, fine. If you want to pay part of your interest, that's fine. Whatever you want to do, you can do with the reverse mortgage. There are reasons for doing that strategically, especially, like I said before, when we were talking about one of the big benefits of the adjustable rate mortgage as opposed to the fixed rate. The adjustable rate mortgage, if you take the adjustable rate on the reverse mortgage, say you've accumulated $5,000 in interest, and you get a lump sum out of your IRA required distribution of $5,000. You can pay that on the reverse mortgage. Now you've got a tax deduction, and you can take that $5,000 in a check anytime you want to if you're using the adjustable product with the line of credit. So think about that concept. It's kind of in the woods there, but that's one of the big benefits. The reverse mortgage is nothing more than a lien on your property, just like a forward mortgage or a home equity line of credit. There are some other benefits for the seniors with the reverse mortgage. That is the Mortgage Minute, again, brought to you by AskAboutReverseMortgages.com. So what I wanted to do this morning, and I asked Melinda Johnson, Freedom First Properties, to come in and help me with this, is we're going to do a bit of a question and answer. We've had a lot of questions submitted, so those we've already transcribed there. Melinda deals with a lot of clients who have had some questions on these, so we're just going to see if we can stump the host, is what we're going to play here. See what we can come up with. Good morning, Melinda.
Good morning. I'm so happy to be a part of this.
Yeah, so what do we have?
Well, I think this is such a great topic because this is an area where I think not only consumers and the heirs of consumers have an area of confusion, but agents as well. So it's a great topic today. I commend you for doing this.
Great. Now, as long as I don't look too foolish, we'll be okay.
So the area that I find the most confusion in is what happens at the end of their life. So let's say they set up this, they pass away eventually, and
it's going to happen to all of us.
Right. The heirs are dealing with the house. What happens at that point in time? Do they own the house?
So the heirs, basically the property is, if one's set up properly, if they've talked to us and they've gone through the process the way we recommend, is they're going to have a trust. The trust is going to describe who's the beneficiary of, and I don't know all the legal terms, I'm not a lawyer, but the trust is going to describe who's going to have control of the property. The investor or the lender, the reverse mortgage company, they have no say in it. So what ends up happening is it goes to that person. They do not have to pay anything more than 95% of the property value. Anything, if there is anything above that, it gets covered by the FHA or the HUD insurance that's on the property. So, and this is one area that the mortgage companies are very, very aggressive at. Within 30 days, they're going to know that the last person on title has passed. So it's always going to be the last person on the loan. They'll know that within 30 days. They're going to send a notice out basically saying you've got to make a decision on what you're doing with the property. Are you going to refinance it and pay off the loan? Are there other assets in the estate to pay off the loan? Or do you want to sell the property? All of that is going to be determined by whoever is running the trust at that point. So that happens in the first 30 days. Under the FHA guidelines, the HUD guidelines, automatically you have 60 days to make all that happen, or 6 months to make that happen. And there's 2 basic 3-month extensions that can be taken after that. So FHA and the bank or the investor, they don't want the property. They want to know, they want whoever the heirs are, whoever's supposed to get the equity, they want them to have it. They want to get their money back. That's all really in any loan, that's what they want. The investors always want. It doesn't matter whether it's a personal loan. If you lend Johnny $100, how am I going to get my money back? That's what you want to know. So here's the same thing. They want to know how they're going to get their money back, how they're going to get their interest.
Okay, so you're not rushed. You have some time. They give you a little bit of time when you're the trustee. They realize that you're dealing with all these type of things, and they're not coming to take your house.
Right.
They realize this was an asset. Title didn't transfer over. But let's say mom was in the house and mom lived a really, really long time. Let's say, to keep math easy, we have a $500,000 house and mom used up $600,000 worth of equity. What sort of options? Do I just mail in the keys to the bank at that point if I'm the trustee? What sort of options do I have there?
So there's 2 different areas there. So one of the things, so basically, if you've got a $500,000 property, and hypothetically, you probably took out a $250,000 loan, it grew over all these years because you're adding the interest to it. Mom wasn't making any payments, so she was saving on her cash there, which is great for mom. The property now is, you owe $600, property's worth $500. You have 2 choices. You can either do what they call a deed in lieu, so you just send the keys into the investor and you sign some paperwork. No harm, no foul. The property goes back to them, and they'll deal with it. The investor will deal with it, and they get the extra money over the $100,000. They're going to get that from HUD, from the insurance that you've paid all through the years.
So they're not liable for that $100,000 if mom lives to 120, just uses up all that equity. There's no responsibility on the part of the heirs.
No responsibility at all. Now, say you've got some sentimental value and you really want to keep the property. Well, then you can go to HUD, Housing and Urban Development, and say, I want to keep the property, and you can actually refinance it, or you have cash from the estate, and pay them $475,000, 95% of the market value. You pay them 95%, and you get free and clear title again. Or with the loan, if you took a loan out for that.
So really at the end of the day when mom passes, you pay the lesser of the amount mom owes or 95% of fair market value.
Right. If mom owed only $300 in that scenario, that's all the investors are entitled to is that $300, and the other $200,000 that's equity is put into the estate and dealt with however the trust is set up. Whoever the heirs are get it.
So if we have a situation where there is equity, which is usually going to be the case, particularly here in California, and, we have the trustee who's handling the estate. They decide that they want to sell the home. Does the bank control that process, or does the person who's in charge of mom's estate, the trustee, say the daughter or the son, whoever mom might have appointed, are they in charge of that process?
Trustee's in charge of the whole thing.
So they would select agent,
Right, they pick their own agent, they find out who they want, they're going to be the ones that are going to negotiate the transaction. If there's equity there, if they're not looking to turn it in, They get to handle the entire process because they've really, not to be legal or anything, but they've really got the fiduciary duty to the rest of the trust or to that trust entity to get the highest and best return and be the most efficient with it. So yeah, they select the agent, they select which offer they like, the whole 9 yards.
So the bank doesn't control that process, and it seems, it makes sense for the trustee to be able to do that. They're usually motivated with the best interest.
Right.
They're usually, in most cases, a son, a daughter, or, a family member who's doing that. So clarify how old or how young can I be and still get one of these?
Well, you're going to love this one. So the technical answer is one of the people that are on the loan has to be 62. If they're married or domestic partnership or whatever, the other could be as young as 18.
Well, that's a whole different topic on a totally different day.
There we go.
But if you have a younger spouse, you get this when you're 62, and then you pass away. Does that still need to be sold within that 60-day period? What happens there?
It's based on whenever the younger person that's on the loan, it's based on, when you have two people on there, they're both part of the reverse mortgage. What's going to actually end up happening is if you've got, say more realistically, a 62-year-old and a 55-year-old or a 50-year-old, the valuation that's going to be available is going to be lower based on the 50-year-old's age. That's how they're going to deal with what percentage you can get in the reverse mortgage versus the cash coming in. And it's when the last person, regardless of which one it is, if the 50-year-old passes before the 62-year-old, then it goes based on when the 62-year-old passes. If the 50-year-old survives the 62-year-old, then it's based on whenever the 50-year-old passes. So they could end up having that loan with no payments for 50 years. Whatever the number is. We're going to talk more about this when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Using a reverse mortgage to purchase a home. Yes, you can do that. You can reach us anytime. Also, our off-air number, it's 800-306-1990, 800-306-1990, or ronsiegelradio.com. Connect with us, facebook.com/Ron Siegel Radio, on Twitter, @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Isn't it time you found out the truth about FHA-insured home equity conversion? No, it's not your grandfather's reverse mortgage. This just may be the finest financial planning strategy available for all homeowners of retirement age. Helping protect what you've earned is the job of your board of directors with continued education. Major research has shown that using a HECM will significantly enhance the success rate of a retiree's portfolio and legacy. Please allow us to educate. For your complimentary consultation, call Jay Kaplan at 949-300-3855. That's 949-300-3855.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home?
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Word on Wealth segment today being brought to you by Gold Star Mortgage. When you're ready for that next mortgage, even the reverse mortgage, give us a call, 800-306-1990. I'll put you in touch with the right folks. Estate planning, wills and trust, who needs them? Well, there's a lot of controversy. When we did our High Trust Senior Symposium, one of the folks there was saying not everybody needs them. I'm not in that camp. I believe that if you own real estate, I don't want you being left to let the government decide what's going to happen with your estate. Get a will, get a trust, get it done properly. I've shared with you before, our friend Al Manfred does it. He gives our listeners of Ron Siegel Radio a 25% discount off of an already outrageously inexpensive program, and it's a great program. So get a good will and trust done. If you own real estate, if you've got kids, if you've got a car, if you've got assets, if you think you may get ill at some point in time, if you don't think you're just going to get hit by a bus and be gone, and most people, they don't plan on getting hit by a bus, so the other end of it is probably more likely. So you want to have all those different documents that are in there, the powers of attorney and medical and finance and all that good stuff. Talk to Al. He understands that. That is the Word on Wealth segment, again, brought to you by Gold Star Mortgage. So we're going to continue our conversation. We are chatting about using a reverse mortgage for purchase today. Melinda Johnson's in the house with us, Freedom First Properties. She's moderating the questions that are coming through and having a good discussion here. So what's up next?
Well, let's discuss some of the different products we could purchase a reverse mortgage with. So obviously we can do it with a single family residence. Like if I want to go to the single story, 2-bedroom on a golf course. What if it's in an association? What if we are actually a condominium? Is that an option?
Condominiums must be FHA approved. So if it's an FHA approved condominium complex, or it can get FHA approved, that is absolutely acceptable. And we do know that, I believe it's June 1st this year, or July 1st this year, every condo association is going to be required, based on some legislation that our friend Lisa Dunn helped with. The condominiums are going to have to put on their annual reports whether they're FHA approved or not.
Oh, I love that. I didn't know that. See, the things I learn on here. That's fantastic. Okay, let's say somebody's being a little bit creative here and they want to buy a duplex or a unit with a guest house or something like that. Are there restrictions if it's an income generating property? Can I do a reverse mortgage, and what restrictions might be there?
Yes, you can do a reverse mortgage. We can do that 2 to 4 units. Again, it's a owner-occupied product, so the person who gets a reverse mortgage must be living in one of the units. It's not meant to be for the Airbnb or the VRBO for short-term rentals. But if it's a long-term rental, you've got a duplex, triplex, fourplex, all fair.
What if I had a fourplex and I was going to Airbnb out the other units?
Not supposed to be done there because
it's supposed to be long-term.
Yeah, it's supposed to be long-term.
Oh, that's interesting. See? Very educational for me.
There we go.
It's good to know.
Yeah.
So what are the restrictions basically the same as FHA restrictions? So if I can go buy an FHA product like a condo or a fourplex, I can basically go do that.
Yep, pretty much the same.
What if it were a business, like say a bed and breakfast type thing, or
can't do that one.
Something along those lines?
No, can't do it. Can't do it with a bed and breakfast, or that's why they get into. They don't want the. That's where the confusion is between like an Airbnb versus a long-term rental, as they look at that as being a short-term and as a business product.
So they don't want you to use this to finance a business, but you can be a landlord with this type of product as long as you're living within one of those.
Right.
What about, can we talk a little bit about the stay-in-place mortgage? I've had a couple of clients, the reverse where we stay in place, like purchase. Okay. So I've had a couple clients lately who've been interested in that type of product. Like they may need to upgrade. They may want a little bit more money. So if they're in a regular mortgage, how can they use a reverse mortgage to help them out? Like if they want to do some improvements or they want to increase their income in their current home, but say they have a loan on it right now.
So that's not a problem at all. You just, again, it all has to do with the age of the younger person that's going to be on the mortgage. And we're going to look at what the ratios come out to, how much their maximum available is. And then they can get the difference, but we would pay off the reverse or their forward mortgage. And then the spread to what they're allowed is what they're going to be able to use for those home improvements to do whatever they want in home improvements. The big issue becomes in that scenario is you're going to get a smaller lump sum in year one, and then you'll get more of the money at the end of 12 months. And it was a great change to the product. There was a lot of seniors that either were getting duped by family members, unfortunately, or scammers, and they would go and take out money out of their property, and then they didn't have money to live on. So, it's the same basic concept. Those people that play the lottery, 4 or 5 years after they've gotten this huge amount of money, they're broke. Well, FHA wanted to try and protect against that. So you get a smaller amount of money right at closing, and then you get a bigger lump sum, generally 12 months down the road.
So we can do a reverse mortgage as a refinance.
Yes.
We can do a reverse mortgage to purchase something brand new. What if I don't have a loan? What if I own my property free and clear? Can I do a reverse mortgage in that case?
Absolutely. And that becomes one of the areas that you really want to deal with somebody that understands the product. Because one of the nice things about that, one of the areas in the product is if the more you take initially, it can have an effect on what the mortgage insurance is. And I don't want to get too much into the woods in this as far as what the expenses are there. But if you take a smaller amount of the lump sum initially and then take more over time, you can end up getting the reverse mortgage at a cheaper price. But if you take too little, then what ends up happening is the expenses can cost you. In certain instances, because the product is so valuable on the secondary market, if an individual will take enough money and they can be guided by the mortgage company, if they'll take enough money on their initial draw, and they can pay it back anytime they want, there's no recourse, you might be able to get the mortgage company to pay all your expenses for you. So it costs you absolutely nothing.
That's just absolutely fantastic. So let's say we do that in that scenario, and let's say I want to put the reverse mortgage in. Can I use the reverse mortgage as kind of a backup plan? So I could treat it like a regular mortgage, but not make a payment if I didn't want to. Let's say I don't have complete certainty of what my retirement's going to look like, or there's some uncertainty with my pension, retirement, inheritance, whatever I'm looking at to handle my future financial situation. Can I make that payment if I want to make that payment, not make that payment if I don't want to make that payment? Can I treat it like a traditional mortgage?
Absolutely. So there are some people that say, in the scenario you mentioned a little bit earlier, where somebody had a regular mortgage, they wanted to get some money out for home improvements, and they've been making their mortgage payment because maybe they're still working, and they still want that write-off. So yes, they can make the mortgage payment and say they decide they want to go on a big vacation, but next month they don't want to make the payment. So maybe they want to make 10 payments this year and not 12. They can do that. It's all up to their option. And that's one of the big benefits of the adjustable rate line of credit version is you can make those payments while you're 62, 63, 64, up till 70 or whenever you want all the way along, whenever you decide. You can be making payments. And then you decide, okay, at age 70, I've got to start making my withdrawals from my other retirement. You can start using it strategically so you don't have tax burdens. Or you can use it so I'm going to take money from my reverse mortgage instead of taking Social Security, because I know that's going to increase my Social Security benefit by 8% a year. So I'm going to use my home equity for the years 62 to 70, get a higher Social Security at age 70 on, and then start paying money toward the mortgage. So it's all optional.
Yeah, it has options for tax planning.
Right.
It's really just such a versatile product. There's nothing else out there like it.
It's very, very unique.
So it's why it can get so complicated out there. Super important to be with someone who understands all the aspects and who can give you those type of choices.
And ask every question you want. That's one of the, when we talked about earlier the concept of the being comfortable with it. You shouldn't do any loan of any sort that you're not comfortable with. So ask questions and questions and questions and questions. And if it's one of the online services where they don't take questions, call somebody else.
So talk about the HUD counselor. What's involved in that?
So basically what ends up happening is you connect with a loan officer or a company that's doing the loan for you. They put together a scenario, they put a code on there, and it's done through the FHA. Then you call one of the counselors. It's a third party. The lending company is going to give you a list of probably 3, 5, 10 different companies to choose from. You call them, you give them that code. They're able to look up what your scenario is, and they're going to go over the rules and guidelines of the program to make sure that whoever you talk to gave you all the information and answered all your questions in an unbiased manner. Generally, it's going to be done in a half hour to an hour, hour and a half. You can do it on the phone or in person, whichever you like.
And that's an opportunity to also ask questions that you may have. And that person has no interest in whether you do or don't do the loan?
Exactly. Plain and simple product. It's just another one of those safeguards for it.
Yeah, it's a fantastic product. It really is a fantastic product.
Well, we're about out of time. Unfortunately, I bet we didn't even get all the questions.
No, I have a whole sheet here, but
well, we're going to do some seminars on it. There's a ton more to it. Thanks for moderating these for us. It's
my pleasure.
It's a great program. There's it's not a lot of people that it doesn't fit for. I haven't seen hardly any other than somebody that's short term in a home. They're planning on moving in a real short period of time. But other than that, set that first radio preset button to come back here every day to join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to John, who's engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime. 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money, have a lot of fun, make a lot of money, help a lot of people have a lot of fun. You'd think after saying it every day, I'd understand that one. Have a great day. We'll talk to you next time on Ron Siegel Radio.
Pour me something tall and strong. Make it a hurricane before I go insane. It's only 12:30, but I don't care. It's 5 o'clock somewhere.